66 gigawatts. That is how much power American data centers will need by 2027. Double what they use today. If you own any AI stock, this is the number that decides who wins. Kronos ran the numbers on 4 power companies. One could drop 17%. That is the call. And here is how the power gets built. Here is the curve. 2025, American data centers pulled 31 gigawatts off the grid. 2026, 41. 2027, 66. More than double in 2 years. 1 gigawatt is roughly one large nuclear reactor. So that is the equivalent of 11 reactors of brand new demand. And the generators are already ordered. The land is already bought. The servers are already scheduled. 35 gigawatts of new power in 2 years, all of it before 2027. That is not a trend. That is a supply crunch taking shape in public, and the grid is the one holding the pen. Here is what 66 gigawatts does to the actual grid. Summer peak power is the moment everyone in America cranks the air conditioning, and it is the single test the grid fears most. In 2025, data centers took 4.1% of that peak. By 2027, that share climbs to 8.5%. In 2 years, artificial intelligence goes from a rounding error to nearly a tenth of the country's electricity. 10% of the grid at the hottest hour in just 2 years. And every utility in America is now staring at the same forecast, trying to figure out where that power comes from. Now the money, because this is where it gets real. For companies, Alphabet, Amazon, Meta, and Microsoft are on track to spend about $650 billion on AI this year. Count every company building data centers, and the global total crosses $1 trillion. That gap, from $650 billion to $1 trillion, is $350 billion. To put that in perspective, more than 170 countries have an annual GDP smaller than that. And every one of those dollars has to become electricity before it produces a single answer. So the AI bubble question is really a power question, and the money is already committed at $1 trillion. That is the bill the grid has to pay. Here is where all that power actually goes. A terawatt hour is 1,000 gigawatt hours, and a gigawatt hour is enough to power roughly 750,000 homes for an hour. So 565 terawatt hours is an almost impossible number. That is what global data centers burn in 2026, up 26% in a single year. Conventional servers still take the biggest slice. AI-optimized servers already take about a third of the total, and they pass conventional servers next year. Cooling the machines down eats the rest. The point is simple. This is not a chip story anymore. It is a power story with a chip on top. Here is the bottleneck, and it is a price problem. A traditional cloud data center costs about $10 million per megawatt to build. A next-generation AI data center runs $15 to $20 million per megawatt because the cooling and the redundancy are that much heavier. There are already 23 gigawatts under construction, 3/4 of it in the United States. And the grid cannot connect it fast enough because the transformers alone take years to build. So 23 gigawatts sit waiting, and every month of delay makes it cost more. Zoom out and the curve gets even steeper. Global data center electricity was 447 terawatt hours in 2025, 565 this year, 702 by 2027. In 2 years, the world adds enough data center power to run a small continent. And the machines that do the thinking, the AI-optimized servers, go from a third of all data center power this year to the majority next year. Cooling it all down eats the rest. That is the entire physical footprint of the AI boom, 702 terawatt hours and climbing. And every one of those terawatt hours has to be generated, transmitted, and cooled. There is a name for what happens next. It is called elongation. The capital gets committed today, but the capacity comes online 2 years later. That gap is the problem. In 2026, analysts expect about 13.5 gigawatts of new data center capacity. In 2027, they expect 36.3 gigawatts. But between now and then, the power has to come from somewhere. Everyone sees the demand. Fewer people track how slowly the supply arrives. And here is what the market is quietly asking. After the last earnings season, 3 of the 4 biggest hyperscalers lost market value within days. Not because AI demand fell, because investors did the math on the power bill, and the returns are 2 years away. When the spend is this big and the payback is that far out, the market does not wait for the answer. It reprices the risk first. 3 out of 4 hyperscalers, down in a single week. That is the setup Kronos is designed to catch. So who actually gets paid to build this? GE Vernova makes the turbines and grid equipment, up 46% this year. Vertiv makes the cooling systems inside the data centers, up 55%. Constellation runs the nuclear plants, down 26%. Eaton makes the electrical gear that connects it all, up 38%. For different ways to own the build-out, for different risk profiles. And Kronos has a 30-day forecast on all four. Here is what the numbers say, starting with the turbine maker. First, GE Vernova. It trades at $990 today. Kronos sees it at $970 in 30 days, down 2.1%. The prediction range runs $947 to $1,041. So the model is calling this a pullback, not a crash. The turbine maker holds its ground, and that is the whole forecast. No drama, but also no upside. If you are here for the power build-out, this is the stock that simply rides along at $970, watching the rest of the trade move without it. Second, Vertiv. It trades at $272 today. Kronos says $308 in 30 days, up 13.2%. The range runs $264 to $339. Of the four names, this is the one Kronos likes the most. The cooling build-out is still accelerating, and the model thinks the market has not priced it all in yet. That 13% move is the model's central call, and it is the most aggressive upside on this board at $308. Third, Constellation Energy. It trades at $270 today. Kronos says $315 in 30 days, up 16.7%. The range runs $258 to $322. Nuclear is the power source every data center signs up for, because it runs around the clock and it never shuts down. Kronos thinks the market is only starting to price that in. Of all four names, this is the strongest bullish signal from the model at $315. Fourth, Eaton. It trades at $449 today. Kronos says $371 in 30 days, down 17.4%. The range runs $359 to $458. That is the most bearish call on this board, and it is not close. This is not a pullback. This is Kronos saying the re-rating is not finished yet. If you own this one, that forecast range is the number to watch over the next month, down to 371. Here is the bottom line, and it is a simple count. 2 bullish, 1 flat, 1 down 17%. Kronos is bullish on Vertiv and Constellation, flat on GE Vernova, and bearish on Eaton. The AI trade is no longer just about chips. It is about electricity, and electricity has its own winners and its own losers. The build-out is real, but the winners are specific, and the forecast range is your risk map. 2 bullish names, and 2 that Kronos says do nothing or fall. That is the call, and the clock is running on all 4 of them. Timestamps for every section are in the description. Subscribe for daily AI finance analysis. This video is for educational and entertainment purposes only. It is not financial advice. Past performance does not guarantee future results. Always do your own research and consult a qualified financial advisor.